Welcome to this book review of Rich Dad Poor Dad by Robert Kiyosaki. It is one of the best-selling personal finance books ever, over 40 million copies worldwide. The story contrasts two fathers, an educated poor dad and a street-smart rich dad. This video is for education only, not investment advice. First big idea, two money mindsets. Poor dad said study hard, get a degree, find a safe job. Rich dad said understand how money works, build assets, and do not depend on a paycheck forever. In India and the US, millions still see only salary or government jobs as safety. Kiyosaki is not saying jobs are bad, he is saying relying only on earned income is risky. Second lesson, assets versus liabilities. Kiyosaki's famous definition is simple. An asset puts money in your pocket, a liability takes money out. Many people assume a big house is always an asset, but if mortgage, maintenance, and taxes drain cash without rental income, the book treats it as a liability. The rich prioritize income-generating assets, businesses, rentals, stocks, royalties. For investors, third idea, the cash flow quadrant. Kiyosaki maps four categories: E employee, S self-employed, B business owner, I investor. On the E and S side you mostly sell your time, salaried roles and solo professionals. On the B and I side systems and capital do more work, businesses that run without you, portfolios that compound. Founders and full-time investors illustrate that shift. The book. Fourth point, do not work for money forever. Let money work for you. The headline sounds shocking because everyone needs a paycheck. Kiyosaki means early in your career choose skills that help you build assets, sales, accounting, investing, negotiation, leadership. Use your job as a bridge, convert earned income into SIPs, stocks, or a side business. Fifth lesson, taxes and corporations. The book explains that employees are often taxed on gross income first, earn, pay tax, then spend. Business owners and investors use legal structures to plan expenses, depreciation, and reinvestment, that is tax planning, not evasion. LLCs, corporations, and legitimate deductions follow the same principle, understand structure and stay legal. Kiyosaki is Sixth idea, do not avoid risk, manage it. Kiyosaki says the biggest risk is financial ignorance, taking real estate, options, or business debt without understanding them. Rich dad demands both courage and knowledge, small bets first, study, mentors, then scale. Jumping into complex trades with zero knowledge is not avoiding risk, it is blind risk. Recap, the core message of Rich Dad Poor Dad, by cash flow producing assets, recognize liabilities, shift from E and S toward B and I, and learn tax and accounting basics. A job can be a launchpad, long-term freedom comes from assets. Listen to critics too, some of Kiyosaki's claims are disputed, but the wake-up call on financial literacy is valid. That wraps our whiteboard recap of Rich Dad Poor Dad. Subscribe for more book reviews and daily market updates. Comment which book we should cover next, The Intelligent Investor, The Simple Path to Wealth, or One Up on Wall Street. This is education only,